Welcome back to my channel. Let's talk about the stock markets because it's been a crazy ride over the past month or so, right? If you look at any of the markets, the emerging markets, the Japan market, the South Korean, the Taiwanese market, they've all hit record highs. And, it's not just record highs, it's parabolic highs, 20% move over 1 month. And that's at the index level, not at the individual stock level. you know, record highs for the Japanese market. The US stock market, 16% on the S&P 500 in a month. The QQQ, the NASDAQ, almost 20% in a month. When have you seen these sort of moves before? And let alone semiconductors have been driving the entire market up. SanDisk, the memory space, Micron, AMD has been popping like no tomorrow, 20%, 20%, 20% gainers day after day after day. And I'm not talking about weeks. I'm talking about days when these chip stocks are popping. And, they don't seem to show any signs of stopping anytime soon. So, what's going on with the markets, right? And so if you've tried to short this market this entire time, you've been either sidelined or, you know, I know a lot of people are reluctant to chase this market as well. So they're sidelined. They're gonna FOMO at the top. They're afraid they're FOMOing at the top, but the market seems to not stop anytime soon. They make highs after highs after highs. So knowing that you can't short the market right now, and that you never know when it's time to the market's going to make a U-turn. And a lot of people have a lot of theories on X, on social media, that we're gonna have a 20% correction this year after hitting 7,300, and now we're almost at 7,400. They keep revising their targets. 7,450 is the max, before this all turns and crashes to the ground. And the funny thing is, they keep pointing to the U.S.-Iran war every time. Um, uh, the U.S. or Trump essentially, says that, there's going to be a deal. They're really close to a deal. Iran has to accept this deal. It's tomorrow. It's within 24 hours. They're going to take the deal. Then something bad happens where, you know, Iran strikes a U.S. carrier, or, UAE, goes after Iran. Whatever the reason is, they're back on the table. And then 2 days later, they got a deal again. You know what I'm saying? So they keep playing these games, but as far as the market is concerned, it has an agenda, wants to continue higher. It is a bullish environment. But if you've been silent this entire time, like, where do you position yourself, right? If you're in cash, you can't chase semiconductors because, like, all these stocks like QCOM, they're up 100% over the last month. AMD 200%, Micron 100%, right? Nvidia, probably is an area to be in, but you don't really want to chase the highs. You don't want to chase any Mag 7s. Where do you be? And today I'm going to present to you an interesting case for IGV, which is a software sector. So the software sector has been completely decimated since the I guess October of last year, August to October of last year. It made a topping process, and it sold off extremely hard off the heels of AI disruption fears. Yeah. And that AI is going to replace software. And, if a lot of people are going through AI, who's going to be the buyer of software, right? Wix, for example, is used to be a web creation tool for non-technical people. And now, if AI can easily replace these websites, who's going to buy Wix? Who's going to subscribe to Wix, right? That's an interesting question, right? A lot of software names like ServiceNow, Salesforce, they've all been completely decimated over the last almost a year, honestly, without showing any signs of recovery. However, I want to make the case as to it's actually kind of bottoming out. And even if we were to get a market-wide pullback, that a lot of people are anticipating and expecting, I think that the bottom for software stocks, a lot of these software stocks are pretty close. And even if we get a large pullback, it's not going to affect a lot of these technical setups that I've seen in the weekly time frame. So let's get right to it.
Tell me about what gives you the confidence to say you're going to hit 30 billion plus sub revenue by 2030.
When I came in 2019, we were a $3.5 billion company. Now we add a service now every year. This year we're projecting to be nearly a 16 billion company. Right now we have a 28 billion RPO. So we're growing faster than any other enterprise software company at scale in the world ever happened. We yesterday said to the financial analysts we were going to double the company again, and we would do that by 2030. And the company right now is really focused on a couple of things. One is agentic business. You know, we have to be the agentic front door. We work with great companies like NVIDIA, the great Jensen, the great NVIDIA. We announced Project Arc. You'll hear about that today. I'm sure Jensen will have some thoughts on it. But we want to manage the identities of the humans and the agents. We treat the agents just like the humans, so the rules and rails can complement this great AI revolution. The enterprise is a pretty messy thing, so we clarify it, we clean the mess up, and we make sure that the AI is secure. And I think that is a big breakthrough. And we told that story yesterday, and people really liked it.
Jensen, tell me about, I mean, this is at least the third time that I'm seeing you here at Knowledge. We're talking with an application software company. You've talked about this 5-layer cake with energy, chips, you know, platform and applications at the top necessary to really make AI work. Why is the application layer not just important, but long-term profitable, do you think? Why does that need to happen, and why is ServiceNow one to watch for you?
This is one of the greatest transformations for the software industry ever. For the first time, service is software. Software is service. And the service industry is 100 times larger than the software industry. And so now, for the very first time, you're going to have human agents that are, of course, managed and supported by ServiceNow, augmented with AI agents that are going to be working autonomously, working with humans, and they're all going to need identity management, access control, network control, all of the things that companies do with respect to regulation and compliance and governance. All of that has to be provisioned, whether you're a human or an agent. And in the future, of course, out at the edge, robotic systems. All of these autonomous systems, the time has now finally come. Now, of course, for our industry, for the rest of the 5-layer cake, it's completely revolutionary because agentic AI needs to be processed in real time. Unlike software of the past that's pre-recorded, you can put it in storage, retrieve it as you need it. Today's software needs to be processed completely in real time. The amount of computation necessary from generative AI 2 years ago to now agentic AI, it has gone up 1,000%. Because the AI now has to read a lot more, use tools, reason, generate a lot of tokens. Not only that, the amount of use has gone up orders of magnitude, because now for the first time, AI is doing work. It's doing useful work, and the return on that investment for software companies, for agentic companies like ServiceNow, is completely accretive. And so that time has finally arrived.
So I want to show us a lot of these stocks like ServiceNow. You can see that back in around June, July, ServiceNow started a topping process at around $200, and it had made a bearish weekly cross at around July, late July of last year. And ever since, it's been a pretty strong downtrend, right? Hasn't recovered anything, and you can see that the histogram on the MACD is extremely red, very bearish, ever since July of last year. And we formed some sort of, bullish divergence on the weekly time frame. So price made a lower low on ServiceNow, and the MACD is making equal lows, and the RSI is making higher lows. You can see that the MACD really wants to turn higher for ServiceNow. And we're really at the cusp of, this turn. It could be, this week or next week, and the stock is sitting around 93. It's been consolidating between 80s and 90s, and it really wants to turn higher to push into that 200-day moving average, which is sitting at 140. So the risk reward for ServiceNow is actually pretty strong at these levels here at around 80, and you can see that even if we get a somewhat of a red candle here, that the MACD is still looking like it wants to turn higher for ServiceNow. So even if we get a strong down red day and next week we get a green, it's still a bottoming process where we can form even a triple divergence, which leads to a very good risk reward return for ServiceNow at these levels. Next up is CRM. You can see our CRM is pretty much, showing the same signs as well. We made some sort of head and shoulders pattern over the last few years, and it's come down pretty hard past the 200-day moving average. And you can see the MACD again on the weekly time frame. So this is not the 1 minute time frame, the 5 minute or the 30-minute time frame, not those small time frames. We're talking about the weekly time frame, which takes many weeks to form and looks like it really wants to shoot higher. So you can see that 232, that we're sitting at 186 for CRM, which is an absolute steal, and it wants to push above that, towards that 200 level, in the weeks to come. And I believe, again, even if we get a sell-off or a red day due to a market-wide pullback, I think that the software sector is going to stay pretty resilient, given all the things that have, already been priced into the software sector, the AI disruption trade, the threats to the software business models, everything negative has been priced into this market. So it's not, everything is going to, everything that bad, if everything bad has been priced in and is at the bottoming process, the only thing that can happen is good, even if the news is bad, but it's still better than what it was feared before, right? Same thing with a lot of these, security stocks like CrowdStrike. It made a bottom and it's pushing back up again. Palo Alto Networks, PANW, it made a bottom around the 200-day moving average and it's moving up again. And you can see where it bottomed around that 200. And the funny thing is, like, if you look at technical analysis, a lot of you might think like, oh, look, the 50 and the 100 is currently down, so it could provide some resistance for Palo Alto Networks going forward. But you can see that, ever since we bottomed at the 200, it just shot right above that 50 and the 100-day moving average. So there isn't really any sort of resistance going on for some of these stocks. And you can see that Adobe, probably one of the worst stocks since 2024, where it topped, and it's forming some very strong bullish divergences on the weekly time frame. You can see here that we're getting a strong cross. It really wants to push higher. I can see that the first resistance is going to be that 323 level for that 50 weekly. But even then, like I mentioned before, it can easily blow past this if the entire software sector is going to recover as a whole, which I am betting on in the weeks to come. And so let's look at the IGV sector. You can see that IGV, which is a software sector, is getting that bullish cross. And like I mentioned, there's 150 could be resistances, but they don't have to be, right? And if things show up that, whether it be from the news or, a different narrative, AI narrative that, somehow it benefits the software sector, wouldn't you wish that you would have bought at, the low ServiceNow at 90s, CRM at 180s? By the time that happens, these stocks are long gone. Okay, it's going to be like the semis that shot up. It's going to be like the Mag 7 stocks that shot up, that you wish you would have bought at the March lows. So, hope this helps you guys. I know it's really tempting to short these, index, the SPY, the NASDAQ, at these levels, that record high levels. It's really tempting to, right? But you have to analyze the risk reward ratio because we're playing with real money here. You have to analyze whether or not, shorting here is ideal. It's almost like shorting in front of a train. Like this train keeps going higher and higher, but you keep shorting and shorting, you keep losing more money on puts. So, uh, you want to stay with the trend, right? There's no telling how high this market can go. It could go up to 750, it could go up to 800, go up to 9,000, for the S&P, SPX, right? Cash index. So there's really no telling where it can go. But, on pullbacks, you just buy the dips in stocks that have bottomed for a very long time, like I mentioned, for these software stocks. As far as the Max 7 or semis, uh, that could be, give or take, a good opportunity because the semis have run so far, so fast, right? 100% return. AMD, Micron, these stocks that people are chasing, SanDisk, whatever it is, it doesn't matter, right? You just want to find the best risk reward opportunity in the markets in order to make money. So there you have it. Hope you guys enjoyed this little spiel, and I'll see you guys in the next video. Peace.